And so I guess what that really leads us to is this liquidity crisis over the last week, where people literally just go around the room and say, what do I own that's got a liquid market attached to it, and how can I sell it immediately, right? I want that liquidity. And we see all of these assets, whether it's gold, treasuries, Bitcoin, anything, correlation starts trending towards one, everything goes down because of the liquidity crisis. Maybe kind of talk through how that works. And then we can get into how governments have to respond, or the Fed has to respond to those types of situations.
Yeah, so the leveraged players always, the lenders always want collateral in the financial markets. And when they're making loans, I guess technically not always, but the vast majority of leverage in the covered by financial assets. And so what happens in these situations is that when you have an investor who has to deleverage, they're getting a margin call. They have to post more collateral because the value of the asset securing their loan just went down. So just getting a giant margin call, and they're going to sell whatever's easy to sell. Now, I talked about how there were dislocations in the U.S. Treasury bond market, of all markets, last week. Liquid, and so people were selling whatever whatever was liquid, and whatever hadn't been nailed down yet. And when you see gold go down, I learned this from watching the 2008 financial crisis. Gold also plunged in 2008. A lot of people would have said, oh, that's not a safe haven asset because it plunged. Well, oftentimes the safe haven assets are the first ones that are actually sold, precisely because they aren't somebody tied up in some of these crazy, leveraged financial structures always. That leverage has definitely got an impact on them, right? We can talk about the gold ETFs or talk about all the leverage in the Bitcoin market. But at the bottom, those assets are nobody's IOU. They are assets that if you own the real thing, if you own the physical gold, or you own your private keys for your crypto assets, they're yours. You have outright title to those assets. They're nobody's IOUs. And so oftentimes because of that, those assets are the first ones that get sold. And we certainly saw that in 2008. We certainly saw that last week. We saw a huge correction in Bitcoin, a much lower correction in gold, but gold didn't exactly act like a supposed safe haven either. Now, all that said, I don't think that 1 week matters for either one of those assets. And in fact, actually, we just flushed out a lot of the leverage, I think, in the crypto market. I wouldn't be shocked if some of the crypto financial institutions didn't survive last week and we just don't know it yet. And by the way, good riddance. The amount of speculative leverage that was taking place on an asset that shouldn't be leveraged has been staggering. And the faster we can clear out that cruft from the market, the better off the market is. I think those safe haven assets are true safe havens, but that doesn't mean they're going to be safe havens every day. And like I said, they were the easiest things to sell last week. When you see gold go down, it means that we're really having serious liquidations.
Yeah, and I think what you alluded to in 2008, I wrote this piece this past week that a lot of people don't know. In 2008, kind of the mid 6 month liquidity crisis period, kind of over the summer, gold actually went down 30% during that time period. But if you then zoom out to the entire crisis, kind of end of 2006 to end of 2011, it was up 3x. So there is that liquidity crisis. You draw down, pretty substantially for the quote unquote safe haven asset. If you look at treasuries, for example, they're seizing, the markets are seizing up. Again, that doesn't mean that it's not a safe haven type asset or not something that people want to get. I think Bitcoin, same thing, right? You see this massive volatility. The other thing that people have to understand is the market cap of an asset like Bitcoin. It plays into this. It's a smaller market cap. It's going to be much more volatile. But the one data point I saw, this was Hunter Horsley from Bitwise was tweeting this. I thought it was really interesting. If you look at the historical volatility of Bitcoin and let's say the S&P going down 9.5% on a relative basis is the equivalent of Bitcoin going down 51%. And so what you saw last week was the S&P went down 9.5%. went down 50%. So on a relative volatility basis, they actually were just as volatile as each one of them, which I thought was super interesting. Now that leads us to, okay, we get the liquidity crisis. Every asset trends towards one on the correlation. They all go down. Obviously, we're going to see monetary stimulus step in. We saw some of that last week. The market's pricing in 100% likelihood of a rate cut coming up here. I think it's this week. Talk to us about how does the government and the Fed respond to all of this? And then we can talk about kind of the impact that'll have these safe haven assets or kind of sound money properties.
Yeah. Before we talk to how the government's going to respond, what you said prompted a really important thought. Again, this is not advice, but it's just a lens through which everybody should think about their own financial situation. I would really encourage everyone to start thinking not in nominal terms, but in real terms. And what do I mean by that? If we're in a deflationary environment and your assets are going down by less than the index is going down or than your cost of living, then you come out ahead. Same thing, if we're in an inflationary environment and your personal inflation rate is less than the inflation rate of the economy, or your assets are going up by more than that, you come out ahead. So we've been in the US really lulled into complacency because we don't have to think about foreign exchange rate risk, since oil's priced in dollars, commodities are priced in dollars, right? The rest of the world has to think about exchange rate risk all the time. It's their norm. And so this whole notion of just because the numerator is going up, the nominal price is changing, that means that my personal situation follows that. We need to start realizing that. And I've been thinking about that for years, that the stock market going up just meant the dollar's value was actually going down. You need to start thinking about that. And so, literally the best stock market in the last few years has been Venezuela. Well, that's because the denominator was going down. Just think about the algebra, right? If all you're paying attention to is the numerator, you're missing the point. You've got to pay attention to the denominator and whether the denominator is changing value.